basically the energy transition is a huge driver. Data centers for AI, just in the last couple of years, it's exploded as a new need, not only to build the computers, but the energy to power those data centers. This is something that wasn't even on the radar screen for many analysts. The projections based on the energy transition and reindustrialization are that we need to find and develop and produce as much copper has been produced in the history of the world in the next decade or two. And that is a huge, huge challenge for the sector. So based on a new discovery we made in our drilling in 2023, Newmont saw the potential at La Plata. It fit their copper gold strategy. So what you're seeing in many of the big gold companies is they recognize having some copper exposure in this upcoming cycle is going to be really important to them.
High-grade silver next to Hecla, a gold royalty agreement with Parker Schnabel, and also a possible world-class porphyry copper system in the middle of the US. Experienced management with company building experience. Newmont Mining is already invested, and so are, for example, Frank Holmes with his US global investors. Also, Eric's brother is a shareholder of the company. Today we are talking to Greg Johnson. He is the CEO of this exact company called Metallic Minerals. Greg, first of all, thank you very much for your time. It's great having you.
Oh, it's great to be back with you, Jan. Thanks for the invitation.
So, Greg, you're in the business for quite a while, right? I mean, you've had great success in the past, for example, with Nova Gold, and you got this company from a few million market cap up to $1 billion company, right? But the time was a little bit different, right? Gold mining stocks are not that popular at the moment. The general mining industry is not that popular. What does it need to bring back the old times to really get the industry starting? What do you think? What are we waiting for?
Yeah, I think this actually is a very similar time to those early days at Nova Gold, in that we're early into a new and developing commodity cycle. So when we founded Nova Gold, and that was back in the early 90s, I had just left working for Placer Dome Barrick, which was one of the world's largest, and currently Barrick is, I think, the second largest gold company in the world. And when we started focusing on Nova Gold, it was a very similar time. It was a difficult market. It was a bear market low. I mean, believe it or not, people, it was during the internet boom, and mining was so old economy that people were very uninterested. So there are many similarities with today's environment. But you have the development of China, and you have the development of kind of, their infrastructure needs and a booming economic cycle that was being driven, and that need for new metals was being held back by the fact that we didn't have new supply. So that, one of the things that's really key about the mining sector for investors looking at it is we go through these long-term cycles that are driven by supply and demand, and we hear that all the time. But what does that mean? It takes a long time to go from discovery to actually producing metal. All the drilling and the engineering, and then finally building the mine and bringing it on stream. And so what happens is, during these periods of low metal prices, big companies, small companies, most of the exploration today is done by these junior explorers, very similar kind of to the pharmaceutical biotech world, where you've got the big producers of the product, in this case, the big mining companies, but most of the exploration work is happening by the small startups and these experienced teams. And so that exploration, it gets tough to fund exploration during the low price cycle. As the market starts to send signals, hey, we have a lack of metal, we need more metal, and the prices start to move up, that signal starts to, basically bring in new investment into the sector. And then that investment, new discoveries are made, but it can take a decade or more to take an initial discovery into production. So that's basically what drove that cycle from 1999, 2001 low period to the peak in 2010, 2011, last cycle. Then we went through a bear market from 2012 to 2016, a fall based on oversupply of metals. And then since 2016 to present, we've been more or less going sideways. We've seen the metals recently, gold, go to all-time new highs, although not on an inflation-adjusted basis, just on a nominal basis. We've seen copper go to its recent highs, again, on a nominal basis, not on an inflation-adjusted basis. And we have seen greater interest move into the sector in the larger producers. And this is pretty typical that early in a cycle, we'll see new money, new investment move into the larger cap producers. And over time, as those become expensive and people are looking for growth, they start to move down the market cap into smaller cap producers and then eventually into the explorer developers. And we're seeing all sizes, large cap, mid cap, and small cap have all been putting in higher highs, higher lows, though it's early days. So this may be the equivalent, I think, if we were going to try to put it, where are we in the cycle from the last cycle? You mentioned NovaGold going from 10 cents to over $20 a share during that 10-year period. Basically, we're in that 2002 period, that the very early days of that last cycle. And what's going to drive it this time? It's not China this time, but you've got basically the energy transition is a huge driver. Data centers for AI, just in the last couple of years, it's exploded as a new need, not only to build the computers, but the energy to power those data centers. This is something that wasn't even on the radar screen for many analysts, and it's becoming a huge factor. They're talking about hundreds of billions of capital to build new data centers across the world here recently, and all of that's going to use metal. So we're transitioning from a carbon-based energy system to a metal-based energy system. And that is a beautiful setup for the mining sector to have a longer and stronger cycle than the last one. Recently, the former Goldman Sachs analyst was saying that energy transition alone is at least a China in the next decade, equivalent to in the last cycle. And probably in the following decade, it's two Chinas. And then you add on to that the desire to deglobalize and make our supply chains less dependent on places like China. You look at the industrialization that's happening in the US and Europe as part of that. It's a huge investment cycle that's happening now. So I think, these are the things that are driving us into this cycle. The fact that we've been through a bear market period effectively since 2012. So we're talking, look at that, 10 years in which there was no really limited exploration going into the sector. It has set the stage for higher metal prices to then drive new investment into our sector. And so a company like Metallic Minerals is very well positioned in that regard by already having a deposit that's got a system the size that we do and has already attracted investment from a major mining company.
Absolutely. And I think we've already seen it with uranium last year, right? How fast everything can go as soon as people realize, oh shit, we need more of this metal. So it can go really, really fast. But
I think uranium was the leader. I think in terms of it was the first metal. And in the last cycle, we saw that too. Certain metals moved sooner, and then eventually all the metals were moving in tandem. And so you're right. Uranium was the first one, and we saw some of the larger uranium companies went up 5-fold, 6-fold. Now it's consolidating a bit, but we've seen, since the large cap gold, silver, copper, all doing well. And now we're starting to see that interest, and we're seeing investors reach out and say, we really haven't looked at the mining space, big major, funds for over a decade. And we're starting to relook. And that's a very encouraging signal, Jan, that we're close to something that's those early days of capital flowing in. And it's subtle patterns, but when you look at that higher highs, higher low pattern that we're seeing, and ultimately based on history, we'll likely see that money start to flow into the juniors, because that's where the big gains can be had. A Newmont, a Barrick, a BHP, they might double in this cycle. But a junior is your opportunity to maybe get something that might go 5x, 10x, even 100x in terms of potential if you've got the right asset with the right team and you're developing that and advancing that in this upswing part of the cycle.
Absolutely. And if we talk about the metals, before we talk more about metallic minerals, you are positioned mainly as a silver and copper story, right? And I think silver is quite known. We are now in the 5th year in an underproduction. So silver has really potential to really go up. But what's the situation like with copper? That's not that well known, to be fair. What's the situation? What do you think will happen to copper within the next few years? Are we expecting a shortage on copper as well?
We really are, because when we look at the largest copper deposits on the planet, many of these were discovered in the 70s, 80s, 90s. So these are becoming exhausted. And the projections based on the energy transition and reindustrialization are that we need to find and develop and produce as much copper has been produced in the history of the world in the next decade or two. And that is a huge, huge challenge for the sector. It's never been done. It's not that we don't have copper deposits still to be discovered, but the easy ones, the ones that are sticking out of the ground, have largely been found and developed if they had sufficiently high concentrations of metal. So now the industry has to look deeper. They have to look at hidden deposits or deposits that have been kind of in jurisdictions that maybe have been off limits or other factors really to find these. So it's a fantastic time if you've got a new discovery in copper that shows it has scale to be developing that project, as we're seeing this upswing in the copper demand, which is going to be really driving things. And that parallels, as you mentioned, with silver. We've seen a fall, basically rising demand and flat to falling supply. And so that really is the ideal formula when you've got demand rising like that. And the big push on silver is solar panels. We've got this, the last couple of years have been just an explosion way beyond analyst projections on new solar installations. Large, probably a big part of that was driven by the Ukraine-Russia conflict and higher energy prices, but it was 5 times higher, the implementation of solar, than was projected by most analysts. And silver is a key component in those solar panels. So yeah, it's an exciting time, Jan. And the thing is, we can look forward at these trends. We can see that there is huge demand coming, but we have to keep in mind, from a mining industry point of view, there's tremendous constraints on how quickly, even after you find a deposit, how quickly you can do the drilling, the engineering, the studies, all of the environmental work that we have to do to create, an environmentally responsible, mine in today's world. It takes time. And shareholders can participate all along that value increase as we go from a higher risk early stage resource to those first few engineering stages towards feasibility, because as you de-risk the project, we typically see the market value on an enterprise value per ounce of gold in the ground or pound of copper in the ground go up as you create that value towards that value that you would get as a producer.
Absolutely. And I think that really equals to a lot of interviews that I have done here on the channel with Rick Rule, for example, with Tavi, also with Peter Kraut, who's known for silver insight, also Frank Holmes, and all of them are really looking to those commodities, especially silver and copper, but not just these kind of investors, also companies like Newmont, for example, who is a shareholder of your company. And Newmont does not only own 9.5%, if I'm not mistaken, of the company. Also, you just released news a couple of weeks ago that said Newmont exercised their top-up rights to purchase additional shares of metallic minerals. Greg, when can we expect the next news release talking about Newmont Minerals really helping you guys again? Is it an option that they step in again and stay with the company? Because Newmont said they only want top-tier assets, right? So these people are really, if they are invested in a stock, that's really a message.
Yeah, no, it's pretty exciting in terms of the timing. We picked up our it's the La Plata project in southwestern U.S. Great location. This is a deposit that was found in the 1950s by Rio Tinto, one of the giants. And at the time, just like many projects, it didn't have the metal price, it didn't have the concentrations they needed at 50 cents a pound copper. But today we're looking at $4 to $5 a pound copper. And so it makes all the difference. So it was worked on later by Freeport. And then we picked it up in 2019 and quickly took it to a first resource. So we're over 1 billion pounds of copper in the ground. And it comes with some very significant silver, gold, and platinum metal credits that we are adding to the resources we go forward. So based on a new discovery we made in our drilling in 2023, Newmont saw the potential at La Plata. It fit their copper gold strategy. So what you're seeing in many of the big gold companies is they recognize having some copper exposure in this upcoming cycle is going to be really important to them. So Newmont acquired a company, Australian miner Newcrest, who had a significant copper and gold component to their portfolio. I think it was about 25%. That immediately gave Newmont some world-class copper gold assets. And as part of their focus, they want to bring in new copper gold production for the future. And so La Plata is a perfect fit for that. So they saw in La Plata the similar geologic characteristics to their flagship mines in Australia and up in northwestern BC. The Cadia and the Red Chris mines, which are both world-class operations. And they saw that same geologic potential, that we've got a district scale system. It's just early days at La Plata. They've been terrific. I mean, in terms of helping us as a major mining company, giving us access to their technical experts, their geophysicists and others. And this year, we sat down with the technical committee. We had the team on the ground with Newmont as well, and went through and developed the goals and objectives for 2024 at La Plata, really utilizing their experience and our experience as well. At Metallic Minerals, we developed the Galore Creek project with Nova Gold in the last cycle. That got purchased by Teck Resources and Newmont. That's a 50-50 for those two companies. And that geologically is very similar to La Plata. So our team brings special expertise in this as well. So it's really complementary what we're doing with Newmont. We agreed on the objectives for the program going forward. We're just now talking about finalizing the budget, and I'd expect we'll be announcing plans for this year, but we've already got crews on the ground doing some of the preliminary work. And the objective here is going to be looking at expanding the resource we already have. But excitingly, Jan, we've developed 20 other targets, each one of which could be a new porphyry center. And it looks like 3 or 4 of those, we've advanced them far enough along that they're ready for drill testing. They've never been drill tested. And the surface results we're getting from those areas are as good or better than the area directly over the current resource. So everyone's quite excited to get a couple of holes in those targets, because those could be very significant new discoveries at La Plata.
Absolutely, Greg. And I think all the German investors are waiting with you, because what was it, 1.5, 2 years ago, you had one of the best copper drill holes in North America at La Plata, if I'm not mistaken. And last year, everybody was waiting for your last year's drill campaign or drill results, and you just released it a couple of months ago. Maybe you can tell us a little bit more about the drill that you had and what you have released just a couple of months ago, and tell us your plans going forward. I mean, you said you found some really great spots to drill in, but how much drilling can we expect this year?
Yeah, so let's talk a bit about the results. So first of all, the discovery hole you mentioned, 816 continuous meters of mineralization starting at surface. I mean, that is a staggering amount of metal when you lay that out in terms of scale. There are very few systems in the world that you can drill that width of continuous mineralization. That was what really got Newmont excited. They could see the scale of the system, and importantly, it wasn't just wide, but at the lower 100 meters of that zone, we were seeing grades over 1% copper. We had up to 10 grams of gold plus platinum and palladium in some of those analyses. So very, very high level concentrations in a porphyry system. So both scale in terms of width, but also grades. In the program that we just recently released our results, we had 4 separate holes that had between 500 and 900 meters of continuous mineralization, similar to what we drilled in our discovery hole. And so it really was quite successful. And one of the things that came out of that program was a better understanding geologically, Jan, of what the controls are. So now we don't just have a number of holes that have assays and grade. We now understand which one of these porphyry intrusives are the controls to mineralization. And so it's really helped the company advance to the next stage. It's been a bumpy ride in the market, just the sector in general, since the first of the year. We had a lot of enthusiasm when the metals were going to their highs, but we've seen a pretty significant retracement, and copper's gone from $5 a pound to $4.20 something today as we talk. And so that pullback has, yes, it's brought everyone's share price back a bit, but we've been trading in the 30 to 40 cent range Canadian. Newmont took their investment at 40 cents. So we're right there in that range. But I think it presents a huge opportunity for shareholders who appreciate where this is going longer term. And the fact that investors in metallic minerals are able to co-invest with the world's largest gold company on a project at similar pricing to what Newmont.
Even on a discount, if you like, right?
Exactly. So I think in terms of what stage are we at? So Jan, I kind of mentioned the various stages, and similar to the analogy I made with pharmaceutical biotech, right? Think about your biotechs. They go through phase 1, phase 2, phase 3 trial, and if they're successful, they get bought out by a major. Very similar in the mining sector. We have a first stage engineering study we call a preliminary economic assessment, then a pre-feasibility, and then a feasibility. And that third stage, feasibility, is the point at which a bank would finance your project to be built. And so the value curve here, if you will, we're at that resource growth stage. That means we don't yet know how big that resource is going to be. And so because these porphyry systems are such big scale, we can do big step outs. We can go hundreds of meters between holes, and we can add a lot of contained metal in a hurry with these big step out holes. And that's the phase we're in right now. We're growing the resource. As we get enough under our belt in terms of the resource, we'll look to do that first engineering stage. And at that point, that's when you start to say, well, what's it going to cost? How would you approach mining? And this is all desktop work, basically. And then you start refining your understanding of metal and recovery. And then you refine that in the pre-feasibility and feasibility stages. So that's what investors can expect. It's not that expensive all the way up until feasibility. Really in terms of, you're drilling holes, you're growing resources, you're doing a lot of desktop exercises. It's not really until those very last stages where you're doing your infill drilling to go to reserves, and then you start to build things. But that's several years down the road from where we are. Right now, investors can participate in the fact that we're in a rising metal price environment. So, that's going to really bring back valuations in the sector broadly. We're growing resource, so investors are getting that expansion of the resource inventory that they benefit. And with a rising metal price, each ounce or pound of metal goes up in value. And then historically, what we see is as you go from resource to preliminary economic assessment to pre-feas to feasibility, the market gives you a higher valuation per ounce in the ground as you de-risk that. And so in terms of, what kind of programs do we need to be looking at? We can do a lot of work for kind of $5 to $10 million a year as we are at this current stage moving forward. And, that's the kind of, budgets we're looking at. And to give you context, Metallic has been raising anywhere from $2 to $8 million a year for the last several years without really too much trouble because of the quality of both our copper and our silver asset. And now that we've got, now that we have Newmont in there and we've got investors like Eric Sprott, we anticipate being able to continue to raise the capital we need to successfully expand this resource and de-risk it through engineering.
That sounds really good, and I think that really gives a lot of confidence for the next few weeks and months. And we are really looking forward to your drilling program at La Plata. But now we already talked about La Plata, but I'm always using Metallic kind of as a great example on how much money you can make within a short time in the mining industry, right? Let's have a look 3.5 years back. You only had your high-grade silver project, even without a resource. I think you were at like 30 cent level. You dropped down to 15 cents, and some investors were like, oh man, I lost 50%. And then boom, within like 6 months, you went up to like, what was it, 150 within an intraday trade. So there was a 10 bagger within like 6 months. And you only had, as I already said, a high-grade silver project without even a resource. So there's a totally different story right now, right? And a lot of potential for the investors. But let's talk about this potential silver project here as well. You're close to Hecla, 18 million ounces of silver in the ground. When is Hecla knocking on your door, or what has to happen on your silver project to really get the majors interested? I mean, Hecla is really buying the whole district there.
Yeah, no, you raised some really good points. I mean, Jan, when we look back and that was in 2020 that we saw, again, interest in the sector, metal prices were moving off of their lows, and we saw that come in. And at the time, Metallic Minerals had a very promising project, our Keno Silver project, but we didn't have a resource yet. And as you said, we went from under 20 cents to well over $1.50 in that 6-month period. And what was driving that? It was really the market realizing the underlying value of that Keno Silver asset. Now we've got La Plata too. Now we've added, hey, in the first 4 areas, we've got 18 million ounces of silver, wide open to growth. That's half the Keno district. We've got now, rather than a small company, Alexco, we've got Hecla as our next door neighbor. They're ramping up production. Soon, that's going to be the largest silver producing mine in Canada. Already, Hecla is the largest US silver producer. So this is a really important asset for Canada. It's a really important asset for Hecla, and it's their highest grade operation. So it's really their number one in terms of quality asset in their portfolio, and they're going to want to see growth on that. And so, what does our position in the Keno Belt? Our position represents the area that's less explored, so it has way more potential. All of our resources are shallow. They start right at surface, so that means lower cost. Some of these are open pitable, so much lower cost than underground. And so there is significant strategic value in that asset for Metallic Minerals, but also for Hecla. Logically, they would probably look at doing some kind of consolidation at some point, because that's going to be really important to the future life of that deposit that they've got next door at Keno Hill.
Right, and it's also opportunity for investors as well, right? Because you want to look from an investor point of view to a company that could be a potential takeover target for the majors, right? For the end, Greg.
Absolutely. And you've got 2 here. You've got both Newmont with their interest in La Plata, and you've got Hecla and their interest in.
I'm really looking forward to them fighting over Metallic Minerals in a bid war. Jokes beside, let's for the end just take 1 minute, Greg, and talk about the gold royalty that you have in place with Parker Schnabel, who's also kind of known in Germany for his TV series called, I think it's called Gold Rush in Alaska on your end. We have a different name here in Germany, but it doesn't matter. Are we expecting any revenue stream here as well for Metallic this year?
Yeah, I'll just mention thing. We've just launched our exploration program at Keno as well on the silver project, and so there will be drilling, resource expansion drilling this year at Keno, and so that'll be something to look forward to as well. So results from both Keno and La Plata coming this year should be really important, I think, in terms of starting to understand the scale and potential of both those deposits. So the context on the alluvial royalty portfolio, in the early days of NovaGold in the last cycle, we recognized having some cash flow as a explorer developer stage company is really a good thing. It makes you less dependent on the capital markets. It gives you stability, and it allowed us at NovaGold to acquire the Donlin gold deposit, which became, under our stewardship, one of the largest undeveloped gold resources in the world, 40 million ounces. That's now a 50-50 joint venture with Barrick Gold. And what allowed us to get in on that project was we had revenue from a sand and gravel business in Nome, Alaska. So we had an opportunity here in Metallic Minerals a couple of years ago to pick up one of the largest blocks of unmined ground in the Klondike Gold District. So this is that famous gold producing district near Dawson City in the Yukon. It's produced over 20 million ounces of placer gold since the turn of the 1898 gold rush. And today it produces over 40% of the gold in the Yukon out of these large-scale, modern, open-pit placer operations. So they don't use chemicals. All the gold is just in the gravel, so they dig it up, they wash it, and they recover the gold. So it's much lower cost, much lower capital intensity. They don't need $100 million mill facility to crush it and use chemicals. They just recover it with the water and gravity. And so we picked up this large package. We did some exploration on it. We attracted as the first optionee, we attracted Parker Schnabel. Last year, they did the test mining on the first block, and they, produced a couple of thousand ounces within a month. That paid us a royalty of about $500,000 in 2023. This year, we're currently talking with additional operators, and a couple of these are also on the show. And so our hope is to be able to expand that production from that first property and potentially add to one or two more operators. And so over the next couple of years, we're still in the building phase. We're hoping to bring production and expand that. Ideally, we're bringing in enough to cover the cost to run the company as a public company and potentially even contributing towards exploration, all from non-dilutive financing. And so that's a real asset. We are one of the largest holders of unmined alluvial ground in Yukon, and we're basically working with highly experienced operators like Parker Schnabel to be able to produce that. We take a royalty of 10 to 15% from that production. And so it's low risk for us, high return, and it really leverages our skills as an exploration developer in terms of understanding how to pick up the ground and get the permits, and then to work with these high quality operators to actually do the production.
Greg, thank you very much for all of your insights. We talked about all your projects. We really talked about the market. You gave some great insights here as well. Thank you very much. And obviously, I have to talk about our conflict of interest, right? Especially with metallic, so people can really read our disclaimer at the end. Greg, is there anything you would like to add in the end?
I would just make a point maybe back to where we are in the cycle again. And this is a great time for investors who are interested in getting exposure to these metals, because these are going to be very important going forward. The mining sector, has been underinvested, undercapitalized, and we're seeing that turn with the recognition for the need of these metals. So it's a great time to be looking at high quality names, good properties, experienced management teams, the ability to raise capital. I think these companies like Metallic Minerals and high quality companies like that have excellent potential over the next 5 to 10 years to really give outsized return as we see this cycle unfold. And I think it's a great time for investors to be looking at the sector.
That's a great statement. Greg, thank you very much for your time. Really looking forward to your news flow and talking again to you soon.
Thanks a lot for having us.
Great.